Why buy futures or why buy
because
stocks?
They never go down.
Why buy stock futures, I guess, will be the topic of conversation here today. This. You should buy stocks because, they never go down, and now we're going to get sued or our compliance officer is going to get angry with us. But, of course, I'm going to put a verbal disclaimer on that statement. They rarely go down. I mean, if you look at a long-term trend, Pete, and we'll get to it after I plug this, the stock market moves higher given pretty much any time frame that you look at. And so we're going to look at some reasons for buying stocks and some ways that you could buy stocks that hopefully make the whole process less stressful because, save the stress for your neighbor who calls the authorities on you when you try to plant a tree.
I shouldn't have said anything. I'm like jinxing myself.
In Winnetka there.
Hey, we don't mention the village.
Whoops, sorry. No one's going to find you. If you do want to find him, though, just DM me on Twitter. I have his address. I've been there before. It's a nice house. And there's, I think, a Fabergé egg or two. What do you got there in that house? Anything? All right. Let's get back to it here.
I got 2 old dogs, a beautiful wife. That's it. That's all I got.
And you don't want the dogs because they're
clinically insane. Yeah,
they're insane, and they tear their ACLs. It's like I don't know if they're like
what the good thing about living out here though is little Frank. He was out playing this weekend. What a wonderful young man.
Well,
bright,
so there you go.
Articulate.
You're mad at me for telling people what village you live in the suburbs of Chicago, but you just gave it away. Now all people have to do is look for a little version of me, and they could find exactly where you live. That's too
younger, more handsome, smarter. Yeah, that's all you have to look for.
Let's get some details going on buying stocks and reducing stress. If you don't already get it, please go sign up at go.smallexchange.com/LITE-confirmation. The URL is right in front of you there. I can even bold it if we're feeling kind of crazy here. But what's really nice about this, Pete, it's a weekly piece of free commentary on the small exchange products and otherwise, just trying to educate people, make them feel more comfortable with futures and the different asset classes. And I went deep this week on reducing stress when you go to buy stocks. I think this has been a common trend here, especially as equity markets get back to all-time highs once again. People are like, I want to be involved, but I also don't want to buy that new high. We talked about it a little bit last week there, Pete. And I gave a couple of different ways for reducing stress in this conundrum that people find themselves in a handful of times throughout the year, which is like stocks at new highs. I want a piece of that. But if I go to reach for a piece of that, am I reaching too high? And it's like this yin and yang that keeps you from, at the end of the day, pressing that buy button. The first piece, though, Pete, to reducing that anxiety as I go into in that free piece, once again, go sign up at go.smallexchange.com/light-confirmation. It's free. It's weekly commentary around futures and everything else. But the first step, Pete, maybe you can agree or disagree with me on this, reduce anxiety by increasing activity, right? Like that's the first place to go, is just like, instead of doing it once per year, do it twice, 3 times, 4 times. That goes a long way to reducing the stigma in your mind around buying stocks.
Right. Absolutely. And the idea that I have to buy, I'm not comfortable unless I buy the lows and sell the highs. And you know what? You remove that trepidation, that difficult part of the decision-making process by engaging with the market a lot of times. There is a difference between over trading, just trading and I've seen guys, I've been victim of this too. Standing in a pit, you were compelled. If there was an order that came in, you had to have a bid and offer always ready to satiate that order. We live in a different environment, actually a better one in terms of opportunity. So we want to stay engaged for so many different reasons. But we also, and I like the point of view, it's a great piece of context of how do we engage in a market with upward bias? How do we engage in a market that's been, I don't want to say parabolic, but dramatically one way in nature? And how do we feel comfortable with whatever level it's trading at? We can find opportunity within ranges. We don't always want to buy and sell in the same day. Nobody's suggesting that.
Sure.
We're talking about the ability to trade. And it's interesting. If you look at this, anything above 2,000 would have been, on the run up, you would have considered an extreme. And if I can't buy it at any point over that because it's overvalued, it would have been a very hard 6 years of trading moving forward.
Yeah, absolutely, Pete, because it does become, the reason why you would buy stocks is right here in front of you. On any given day, 54% versus 46% down, 54% of the time the market's moving higher in equities. On any given week, it's a 62% probability that the market's going to move higher there. On any given month, Pete, that's a 75% likelihood that the equity market moves higher. So right there is your why buy stocks, because rarely do we find an instance where a market is greater than 50% in our favor. And I don't need to, I put the statistics out here relative to the small stocks futures here, which we created almost a year ago, coming up on the 1-year anniversary. Great futures product. As we speak right now, it is putting in, I think, a new all-time high. Only costs about $500 to use this stock future to invest in a product that now is, well over $7,000. So great efficiency with your capital there. And it tends to move higher in any given day, week, or month when you look at these statistics. But everybody knows that, like, whether I use the statistics, Pete, or I put on, like your mom or dad or grandpa or grandma hat, and I'm just like, yeah, the stock market through my lifetime tends to move higher. You want to take, extra money you have and invest it in the equity market while you're young, or even in your, 40s, 50s, 60s, whatever period of time it is. Great investment. But after that why is fulfilled, why buy stocks? You got the facts all in front of you. It is quite literally finding your space on the between the two polar opposites, which is one, the person who goes into the casino and puts, all of their money on black or red on one roulette spin and is like, well, this is going to be, I got one big bet. And the other side of the spectrum there is the person who clocks in every day and just toils away spinning that slot reel, for hours on end. You don't want to go that crazy with it. Somewhere in between, though, is a good fit for pairing activity with not too much activity there. And I think at least a good start is, picking today or this week or next week, whatever, set yourself up with one time to start that investment, Pete. And you can just do something as simple as price average. You have $10,000, $20,000, whatever it is, and you get one small stocks future on today or this week, and you save the rest of your investment there for, $60 when it gets down to there, or $50 when it gets down to there. Because the nice thing is that you're getting yourself started. You're not putting it off because of that anxiety.
Great point.
But you're not coming in and saying, all right, I got 20 grand. It's going all down on the stock market today, April 26th. It better go up from here. And if it doesn't go up after this one initial investment, you just pick up more investment as it moves lower, and you average yourself down to, like, if you bought 70, 60, and 50, now you have your whole investment, Pete, priced out at $60, as opposed to putting it all in right here or waiting too long and not getting any on.
Well, and I think you hit on so many good points there, Frank. Whether you want to call it dollar cost averaging or cost basis reduction, all those things, it is the ability to be able to accept. You're not going to pick highs, you're not going to pick lows, and be able to participate in the market. And I think, when we talk about all the benefits of futures and the efficiency, what's great in this particular example is if you were to do this with any of the other existing equity index futures, it's the size of the account you have to be able to use multiple price points. And I think you guys know, I'm a great advocate of that. If the product's small enough to enhance my trade location, I call it, or get a better cost basis, whatever terminology you want to use. And it's really a function of, if the product's small enough to do that, I can use multiple units. That is a powerful strategy, because then I can manage those multiple units. I don't have a binary decision. My 20 is in because I'm trading one futures contract, and I got to either have it on, live with it, or take it off. And this is part of the flexibility. And the average concept here is great, because we're stepping back a little bit, talking about context of tradable opportunity here. But the product sizing is almost a requirement to be able to take advantage of this.
Yeah, you rarely find a futures product in equities, here, Pete, that allows you to price average in the small exchange with the product around $7,000 and only costs about $500, $600 to trade. You can divvy up a potential investment of 10 grand or 20 grand as large as you want. If you got 50 or 100 grand you want to invest, you can absolutely scale in and out. But those other equity index futures do range from 20 grand at the lowest to 200, almost 300 grand at this point. You can't really price average into that. So, why buy stocks? We already laid out the statistics there. It on a day, week, month, and year tend to move higher. Where do you start then? Start just today. Start this week, and you don't have to put go all the way there with all of your investment and put it all on one trade here today, but increasing activity just a little bit and getting started here this week or this month, whatever you want to call it. It's up to you at the end of the day, and then price averaging from there. Giving yourself the flexibility, that little activity goes a long way to reducing stress and buying stocks.